With the tax year end just around the corner, do you have all your ducks in a row? Let's break it down. April 5th marks the end of the tax year, meaning that it's the final day before tax allowances and exemptions refresh. Although some of you will have it all covered already, let's make sure you're doing everything you need to do in order to make that happen. For individuals in anticipation of the tax year end, there are 4 main considerations to keep in mind. Making sure you've maximized your JISA allowances as far as you can, ensuring you're contributing to your retirement with a pension, giving your kids or grandkids that financial head start, and being aware of the tax allowances that you have. Let's start with tax-efficient account options. If you're over 18 and a UK resident, you have an annual personal JISA allowance each tax year, meaning that you have until April 5th each year to put up to this amount into your JISA, which you can then use to save with a cash JISA or invest in shares, funds, investment trusts, and ETFs with the stocks and shares JISA. Or you could have a mix of the two of them. Although any returns made within an JISA are free from UK income tax and capital gains tax, ensuring that you're investing efficiently and with the flexibility to access that money whenever you want. Similar to JISA allowances, it might be worthwhile topping up your self-invested personal pension contribution if you can before the tax year end. So you can shelter up to the pension annual allowance each tax year, depending on your earnings, with no capital gains tax on profits and no tax on dividends from shares or income earned on bonds. It's important to note too that contributing to a pension is often the most tax-efficient way to save for retirement. And if you're looking to create a tax-efficient savings pot for your children or your grandchildren, a junior stocks and shares JISA is well worth considering. The junior JISA 2 is free from tax on profits, and there is no tax either on dividends from shares or income earned on bonds. Now to consider any investments held outside of the tax-efficient wrappers of JISAs and pensions. As the tax year comes to an end, there's opportunity to consider whether your wider finances are as tax efficient as possible. In some cases, the end of the tax year could be a last chance to make a switch from taxable to tax efficient accounts, and also to shelter some of your hard-earned savings and investments from future liabilities. To ensure you're doing everything you can to be prepared for April 5th, you can download our guides, attend our webinars, or have a free 15-minute call with one of our financial experts to help point you in the right direction. Or if you're all set, open up or top up a Charles Direct account and start investing in minutes.
Find out more today.